Hello, everyone. Welcome to this little trade management mini session. We had 3 trades in our Trading a Smaller Account webcast series that hit targets and exits recently, and I thought I'd take a few minutes to go through how those worked out. So, my name is Barbara Armstrong. I am a coach and senior manager with Charles Schwab. If you're not following me on X, consider this your invitation at Barbara Armstrong CS. You can now also find me on LinkedIn. And just before we go to review these trades, just a quick reminder that options carry a high level of risk and aren't suitable for all investors. These example trades were done for example purposes only, and they are done on the paper money software application on the Thinkorswim desktop platform, which is a great place to learn and try things out before you consider trading in your live account. Now let's go to our first trade, which was done on Delta on June 26th. So we bought a long call and we had a 1 ATR target on that. Now, if you're not familiar with average true range or ATR, I encourage you to go back and watch that webcast recorded on the 22nd. I'll put a link into it in the show notes and, at the end of this webcast. But it was a short-term target. We placed the trade on Monday. It hit that target on Wednesday. So it basically went exactly as we intended it to. And so what was the net result? Well, if we come to the monitor tab and to our account statement, and we're going to bring up Delta, and I'm just going to bring us into our Trading a Smaller account, we can see this trade that was placed on Monday on Delta. And what we're looking at is this trade here. So we placed this trade on the 22nd. We bought this call, and then it hit our target here on the 24th, 2 days later at 571. So it's pretty easy to see how much we made. We're just going to subtract 571 from the 450. So we made $1.21 a share. Or, if we want to look at our return on our risk, what were we risking? Well, we paid $450 for the call. We could technically have lost all of it, and we made $121. Pardon my handwriting. And so that was, and we were risking $450. And so our net return on that was a 27% return. And in our Trading a Smaller account, we would call that a base hit. So, we were happy with that result. Okay, so that was the first one. Now, the same day, we also placed a trade on Citigroup, ticker symbol C. And we can see now this is a trade that didn't go according to plan. But when we look at this, Citigroup has really been uptrending, and we've had a series of only 1-day pullbacks. So we looked at this and said, well, hey, this stock hit a new high on this day, and then we had this bullish harami pattern happening, which doesn't require confirmation from a technical perspective. And so we placed the trade. And then the next day, it did not hit our target. Now, our example trading plan for this trading strategy says if it doesn't go up and hit your target, then you move your stop up to $1 below the low of the day. So the low of the next day was 143.14. We moved our stop up to 142.14. The next day, the low was pretty much the same, 143.18, so we just left it. Now on Thursday, the stock rose actually, fairly dramatically, closed close to where it opened. So we should have moved our stop up on that day to 143.82, $1 below the low of that day. And I intended to demonstrate how to do that in our class today. But as it turned out, it came down and it hit our stop, and we ended up out of the position. Now, had I not waited to demonstrate it, we still would have exited the position. We might have lost a little less. But how did this trade pan out? Well, let's come to the monitor tab, and now we're going to look at Citigroup. So we can see this trade that we placed on Monday, like we did the Delta trade. So we placed the trade on Monday. We paid $3.70 a share for it. or $370. We ended up out of it on June 26th, today's date, at 248. So when we do the math on this one, we were down $1.22 a share. So basically the money we made on Delta, we gave back on Citigroup. And if we look at our return on risk on this one, we were down $122 on a risk of 370. And so we had a negative return. We were down 32% on this trade. Now, was this a bad trade? I would say it didn't go the way we wanted it to, but I would say it was still a successful trade. It was just a trade that didn't make money. And what do I mean by that? And why am I talking about that? Because I don't want someone to think, well, I obviously don't know how to trade. If I placed two trades and one of them was a loser and I ended up, net close to zero. But if we come back and we look at the chart on this, was the entry, when we look back, would we still say it was a valid entry? And I would say yes. Then the next question is, did we follow the guidelines in our trading plan for how to manage the trade? And the answer to that was yes. We moved the stop up at the end of the next day. We reviewed it the following day. Our intention was to move the stop up the day after that. So we were following our plan. This just turned out to be one of those trades that didn't turn out to be profitable. So having said that, let's go look at trade number 3. Now, trade number 3 was Bank of America. And Bank of America, we saw on the chart this cup and handle pattern. And then we saw a breakout, and so the breakout occurred here. We discussed this in class and we placed a trade on this day. Now, if we were placing our trade based on the range of this pattern, the target would have been about $8 because that's about the width of this pattern from 46 to 54. But what we did on this one was we looked at the fib extensions. And if you're wondering, if you're looking at something in hindsight and saying, like, how did I come up with that target? Let me show you what we did. But the net of it was that it hit this target on Thursday, the 25th. So let's go and look at how this one panned out. I'm just going to close my drawing tool. So again, we're coming to the monitor tab, we're coming to the account statement, and we're going to bring up Bank of America. And we place this one, as we can see, on the 12th. And I'm just going to put a line through these to eliminate the distraction. But so we bought 100 shares of stock. So this was a stock trade on the 12th, and it hit our target on the 25th. And so we got in for 55.67. We ended up out at 59.01. And so we made on that $3.34 a share, or $334. Now, how much did we have to invest to make that money? Well, we invested $5,567, $55.67. So our return on our investment was, and I rounded just a little bit, but it was basically 6%. For a trade that we were in for just over 2 weeks. Now, I said I would show you where you could see notes you put into yourself. So if I put in a note saying what the target is and how I came up with it, it was a fib target based on the 161 extension. And so that's how that came in. And I can see that in the order history, even after the trade is closed. And you can see here that we put in our target of 59. We got out like a penny ahead on that. But know that with stops and targets, there isn't a guarantee that you're going to get out at exactly the price requested. So that's the three trades I wanted to review. Two were winners, one was not, and that's the life of trading for you. I thank you for joining me today. Stay tuned. There are lots of great webcasts still coming your way. Have a great day, everyone. Bye for now.